Of Sacramento this morning with the blue skies and the wispy clouds. No wonder so many people want to live here, and that has just been driving up our housing prices. After a year of skyrocketing prices and bidding wars over homes in our area, signs are finally starting to show a cool down. Is it? Brendan Haefele is the president of Catalyst Mortgage, here to share some of the data and where we could go from here. Mr. Haefele, good morning to you.
Good morning. Thanks for having me.
Okay, some of the statistics show that all 5 counties in Sacramento region are showing that sales are declining last month compared to August about a year ago, a slide even in popular El Dorado and Placer counties. So, is this a sign that the housing market is cooling off?
Well, I think that we're really starting to see some buyer fatigue. We've had just such a run up in home prices. And so I think people in general are a little bit tired. But with that being said, now it presents a great opportunity for the people that have been sitting on the sidelines to really now jump into the market.
Okay, buyer fatigue. So who can benefit in this market the most? The buyers, the sellers, both?
Well, I think both, but I think that the reality is, in Sacramento, it's still very affordable. In our overall region, it's very affordable, comparatively speaking, to other cities. And so I think that if you're able to come in with a 5% down payment, in many cases, it's still cheaper to own than rent. And really at the same time, we're talking side-by-side payment to payment. Around $2,500 is the average to rent an apartment in the Sacramento region, whereas you're talking $2,100 to $2,200 for a mortgage payment. So if you have that down payment, it's definitely worth looking at. But more importantly, there are grant programs available. So even if you have been sitting on the sidelines and you don't have that down payment, there are some options available.
Okay, let's look from a buyer's perspective real quick, Brandon. If in fact the market is cooling off, what are some of the tools that buyers can use to finally getting in that home? Could they barter for the price, which we haven't seen they've been able to do over the past summer?
Well, I think that that's a great point. Now with the market cooling down, buyers will have a little bit more of an opportunity to come in with down payment assistance programs, with doing the less down payment, like 3 to 5% down type of loans. And I think that they'll actually have those looked at more, thoroughly through the seller's eyes to see, hey, do we accept this offer or do we look at a cash position? So I think that really buyers that have been on the sideline can really come in now and potentially take advantage of the market.
Okay, let's go from the seller's perspective. Say they want to really sell that home. Say they've got another one that they've got their eye on, but say they're contingent. They have to sell this home. If they're thinking, oh, the housing market is cooling off, I have to sell this home at a certain price, should they waver or should they really stand their ground and think that they can get what they want for their home?
Well, that's one of those things that you really have to work with your real estate agent on. I mean, personal opinion would really dictate on how fast you need to move or if you're able to support both mortgages. But if you are in that tight financial position, you might be pushed into a little bit of a corner to sell if you don't get an offer and have to lower your price. But again, I would say work with a real estate agent or a realtor in the Sacramento region or in your specific area and find out what they think they can do and how fast they can move your home.
Brendan Haefele, CEO and President of Catalyst Mortgage. Also look for those still low interest mortgage rates, which you're helping people get into in the Sacramento area. Thank you so much for your time this morning and helping us to navigate the possibility of the Sacramento real estate market cooling off. Appreciate you. 8:19.